Welcome to the Alan Berry Reports TV show. I'm Alan Berry Laboucan. I'm the editor of the Alan Berry Reports and the host of this show. Thank you very much for joining us today. On today's show, I wanted to talk about something I call reluctant commodities bulls. And what I'm talking about in that instance is back in the 1990s, there was a lot of market commentators, gurus on TV that would pretty much dismiss commodities and resource stocks as an investment. Basically, they would say that this is old school an old school economy, that it's not that important, that there was much more attractive things in the late 1990s like technology stocks, and we all know where that technology boom led and then ended in the early part of the 2000s. But now some of these same people that were totally dismissing commodities and resource stocks as investments are now become reluctantly bullish. What I mean by that is, they could no longer, during the last 10 years or so, as the commodities bull market started out and gained momentum, they could no longer deny that this was a good place to look for investment opportunities, but now they sort of changed their tune a little bit. Now they're reluctantly bullish about commodities, but they totally dismiss resource stocks. And just like the advice in the 1990s was poor because it made a lot of people disregard the potential of commodities and resource stocks as an investment, this same sort of mentality of, yes, we see that there's a bull market, yes, we'd look like idiots if we talked poorly about it over the last 10 years. So they now say, well, if you're going to look at commodities, and some of them are even quite bullish on commodities now, they say you could just ignore resource stocks. And some of their reasoning comes down to, well, the problem with investing, I'm paraphrasing what they have to say, the problem with investing in resource stocks is, well, you could run into poorly managed companies, and then even if the price of the commodities goes up, then you'll still lose money. And this is again so they'd say, well, then you don't want to even consider resource stocks because you could run into poor management. And this really loses sight. I mean, do you not want to invest in technology companies because they could be poorly run, and let's just invest in silicon instead? That kind of mentality, I think, really misses the boat. And this leads me to why I like resource stocks, and there's several different reasons of why I like resource stocks. I'm not going to go into everything, but I did want to go into a few of those things. And one of the reasons is that the supply and demand fundamentals, I talk a lot about supply and demand in the past shows. I've talked a lot about it in my past reports, and I'm not going to go into a lot of the details other than to say that the long-term supply and demand fundamentals are bullish. They look to stay that way over the long term, and nothing has changed our opinion on that. Now, another reason that I like to look at resource stocks, and I sort of separate them into a few different camps. You've got the major mining companies that are well-known names throughout the global investment community. These are the companies that produce the commodities that we need to make everything run and produce what we do, and for the global economy. And when it comes to the small, then you move down into the smaller sized companies. These are the middle. Then you get into the middle tier companies. These are companies that aspire to be major mining companies of the future. And then below that, you have what are called your resource, your juniors, your exploration companies. And it's in that middle tier and the junior sector, or as part of the market, that I really focus most of my attention on. And the reason for that is these middle tier and the smaller juniors, they are very undercovered when it comes to brokerage house analysts. And that is a way that a lot of investors still follow various different sectors. They tend to go and look at what the major brokerage house analysts are saying about an industry, and the brokerage house analysts tend not to pay a lot of attention to the middle tier and the juniors in the sector. And so this creates some real bargains because of this lack of coverage. And so that's another main reason that we follow the middle tier and the juniors quite closely. Now, the third reason, and this is a really important reason, is that when you look at commodities, you can buy what is above ground. You can go out and buy what's already been mined, or in the case of oil, produced, and or you can buy it in the ground. Now, say for the example of an ounce of gold, right now it's trading at about $1,100 US dollars per ounce, and so you want to go out and buy an ounce of gold, that's what it'll cost you. Now, when you're looking at the same gold in the ground, oftentimes there can be huge bargains, and it gets a little complicated, but I'm going to try and break it down to the basics. And what I do when I look at a set of drill results is I try to determine, is this a low-grade or a high-grade deposit? Many low-grade deposits make a lot of money, and so it's not to say low grade. Sometimes people think that that's a put down or something. No, it's a very good thing. If you have a low grade deposit that's close to surface, you can open pit mine that. You can process 50,000 tons a day and make a lot of money, even though you're only making, even though some of these companies might only be making $10 or $15 of profit per ton. When you're processing 40 or 50,000 tons on a daily basis, it adds up quickly over a year. And so that's one way that mining companies make money. And then the second way is they have deeper deposits that are higher grade, where you have to go underground in order to get to those deposits. Now, these can also be very lucrative. It comes down to what is the value of the metal in the ground. And so when I determine if a deposit is high grade, low grade, that's important. Then I want to determine, well, how much am I paying for those metals in the ground? And oftentimes you can get those resources in the ground at a significant discount to what it's relatively worth compared to buying an ounce of gold or a pound of copper above ground. So, you know, those are some of the basics. We'll talk about these more in the future, but really when it comes down to it, I think that resource stocks offer a great way to find bargains, find some real good opportunities that could perform exceptionally well. So that's a wrap on today's commentary. Before closing, I'd like to stress the show and the reports are for information purposes only. We aren't making buying or selling recommendations. It's important for you to do your own homework, own research, and can speak with your financial advisors before making any investment decisions. We're always trying to grow our audience. If you'd like to help us, if you look below the screen, you'll see some buttons that are share buttons that'll help you pass the report and how to find it onto your friends that follow the market. We really appreciate you taking the time to watch the show. We're well aware that everybody is busy these days, and we strive to produce a show that saves you time and gives you helpful, high-quality information. As always, we hope you can join us for future shows or visit us on our website at allenberryreports.com. Have a great day.